Namaste. Welcome to both my YouTube channel and to the topic Foreign Exchange Management Act 1999. Myself Deekshith Kumar, Assistant Professor in the Department of Commerce, Government First Aid College for Women, Chikmagaluru. Let us start the Foreign Exchange Management Act 1999. Friends, before going to the new concept, I request all of you to subscribe my YouTube channel for future video updates. I think all of you know that India opened its economy in the year of 1991 in the name of liberalization, privatization and globalization. The economic environment of the country changed afterwards. In 1993, part of the ongoing process of economic liberalization relating to foreign investment and trade, several amendments were made in the existing Foreign Exchange Regulation Act 1973. But these amendments do not adequate as there was a substantial increase in our foreign exchange reserves, growth in foreign trade, rationalization of tariffs, current account convertibility, liberalization of Indian investments abroad, increased access to external commercial borrowings by Indian corporates, and participation of foreign institutional investors in our stock market. Keeping all these, Indian government, that is central government, repealed the Foreign Exchange Regulation Act 1973. So now instead of FERA, Foreign Exchange Regulation Act, we have Foreign Exchange Management Act after the year of 1999. This act was passed on December 1999 and came into force with effect from 1st July 2000. This act applies to the whole of India. Keep in mind, the whole of India, it is mentioned in the section 1 subsection 2 of the act that it shall also apply to all branches and offices and agencies outside India owned and controlled by a person resident in India, and also any contravention thereunder committed outside India by any person to whom this act applies. It's clearly mentioned in the section 1 subsection 3. Okay. Objectives. What are the purpose? Why this act has been created? The act aims, it is said in one sentence in the act that to consolidate and amend the law relating to foreign exchange with the objective of facilitating external trade and payments. To facilitate external trade and payments and for promoting the orderly development and maintenance of foreign exchange markets in India. In addition to this, the objective is to restrict current account transactions by the center in consultation with the RBI, Reserve Bank of India. And lastly, to allow foreign exchange and flow only for transactions that are permitted on capital accounts. Friends, these are the objectives. Next, let us see what are the features, silent features of this act one by one. There are many sections which are dealing with the activities or the features of this act. That first one is under the chapter 2, section 3 to section 9 deal with the regulation and maintenance or regulation and management of foreign exchange. Under that first one is dealing in foreign exchange. That is said in the section 3. What is this dealing in foreign exchange means? As per this act, dealing of foreign exchange is not open to all. As specified, it is given that prohibition of dealings in foreign exchange. That means no person shall deal or transfer any foreign exchange or foreign security to any person not being an authorized person. Only authorized persons are permitted to do foreign exchange activities. And in addition to this, no person shall make any payment to or for the credit of any person resident outside India in any manner. Authorized persons are only permitted to make such payments. Here payment means what? The word payment has to be understood in its ordinary sense, namely the act of paying. In this act, payment covers the cases of money which may be received by the agent whose duty to pass on the money to others on the direction of persons whom the owner of the money. It has been decided in some cases. In addition to this, no person shall receive otherwise through an authorized person. Keep in mind, no person shall receive otherwise through an authorized person any payment by order on behalf of any person resident outside India in any manner. That means only authorized person must deal with such payments or receiving activities. Lastly, under this dealing of foreign exchange, no person shall enter into any financial transaction in India as consideration for in association with acquisition or creation of transfer of a right to acquire any asset outside India by any person without the authorized person. That means only the authorized persons are persons permitted to do foreign exchange. Other person cannot do anything under this act. That is dealing with the foreign exchange. This about section, these are all told in the section 3. Next, holding of foreign exchange. Not only dealing, the holding also mentioned in the section 4 of the act. According to this act, as per the section 4, no person resident in India shall acquire, hold, own, possess or transfer any foreign exchange or foreign security or any immovable property situated outside India. That means no persons are allowed to make such holdings outside India. Okay, next section 5. In section 5, current account transactions, about current account transaction is said. That is, according to section 5, any person may sell or draw foreign exchange to or from an authorized person. Once again repeat, any person may sell or draw foreign exchange to or from an authorized person if such sale or drawal is current account transaction. However, the central government may in public interest and in consultation with the Reserve Bank impose such reasonable restriction for current account transaction as may be prescribed. Even though it is allowed, central government through consultation with Reserve Bank can impose any restrictions on this current account transactions. Next, as per section 6, deals with the capital account transactions. Under this section 6, elaborately it has been explained in the act that foreign exchange transaction through authorized person means any person may sell or draw foreign exchange to or from an authorized person for capital account transaction. This is mentioned. In addition to this, holding by any resident in India. That means who can hold the capital account transactions or foreign exchange. A person resident in India may hold, own, transfer or invest in foreign currency, foreign security or any immovable property situated outside India if such currency or security or property was acquired, held or owned by such person when he was resident outside India, or inherited from a person who was resident outside India. That means if person is residing outside India or he is receiving from a person who resides outside India, he can hold the foreign exchange or foreign security or any immovable property. Holding by a person resident outside India. A person resident outside India may hold, own, transfer or invest in Indian currency, security or any immovable property situated in India if such currency, security or property was acquired, held or owned by such person when he was resident in India, inherited from a person who was resident in India. That means outside person can, or that person residing outside India, he can hold the he can hold the Indian currency or security or immovable property by a person resident in India. This act also prohibits the establishment in India of a branch, office or other place of business by a person resident outside India. The Reserve Bank may by regulation prohibit, restrict or regulate establishment in India or of a branch, office or other place of business by a person resident outside India for carrying of any activity relating to such branch, office or other place of business. So this is about section 6. Further, in the section 7, about the export of goods and services are said. Every exporter for making export business in India shall give some details or furnish some documents to Reserve Bank of India. That is said in the export of goods and services section 7. Declaration. What is this declaration? Every exporter of goods shall furnish to the Reserve Bank of India or to such other authority a declaration in such form and in such manner as may be specified, containing what that declaration should include. What are the things that need to be mentioned in the declaration is true and correct material particulars including the amount representing the full export value. Whatever he is exporting, he has to give a declaration stating the true and correct material facts about the exporting materials. Suppose if the full export value of the goods is not ascertainable at the time of export, the value which the exporter having regard to the prevailing market condition expect to receive on a sale of goods in a market outside India. That means if he is not able to ascertain the value of the goods, what is expecting from the sale of that goods, that has to be declared to the Reserve Bank of India. This declaration is compulsory. And in addition to this, every exporter goods shall furnish to Reserve Bank of India such other information as may be required by Reserve Bank for the purpose of ensuring and realization of export proceeds by such exporter. In future, suppose anything is required or any information is required about the export goods or values or any documents that need to be furnished by the exporter to the Reserve Bank for information. Next, the section 8 deals with the realization and repartition of foreign exchange. Realization and repartition. This realization and repartition things are mentioned in section 8 as well as in the section 9 also. Where any amount of foreign exchange is due or has accrued to any person resident in India, that person shall take all responsible or reasonable steps to realize and repartiate to India such foreign exchange within such period and in such manner as may be specified by the Reserve Bank. He has to mention whatever he has received from outside India by foreign exchanges. This is realization and repartition of foreign exchange. He has to disclose everything to the Reserve Bank of India whenever specified in a such manner. And in the section 9, exemption is also given. Section 9 deals with the exemption of realization, repartition of in certain cases. The provisions of Section 4, that is holding of foreign exchange, as I told earlier, and Section 8 dealing with the realization, repartition of foreign exchange shall not apply to the following cases. Which are those cases? That means Section 4, Section 8 are given some exemptions. Section 4 deals with the holding of foreign exchange, and Section 8 deals with the realization, repartition of foreign exchange. So exemptions are given to certain categories. Number 1, possession of foreign currency or foreign coins by any person up to such limit as the Reserve Bank may specify. Possession of foreign currency or foreign coins by any persons. Foreign currency or foreign coins acquiring maybe to certain limit. The Reserve Bank can specify it. Foreign currency account held or operated by such person or class of person, and the limit up to the Reserve Banks may specify. Foreign exchange acquired or received before the 8th day of July 1947, or any income arising or accruing thereon which is held outside India by any person in pursuance of general or special permission granted by Reserve Bank. That's the matter relating to the before the 8th day of July 1947. Foreign exchange held by a person resident in India up to such limit as the Reserve Bank may specify, if such foreign exchange was acquired by way of gift or inheritance from a person referred to in the clause C, that is foreign exchange acquired before the 1947, including any income arising therefrom. Next is foreign exchange acquired from employment, business, trade or vacation services, honorarium, gifts, inheritance or any other legitimate means up to such limit as the Reserve Bank may specify. That means all need not to be realized or repatriated to the Reserve Bank of India. Certain exemptions are given. And lastly, such other receipts of foreign exchange as the Reserve Bank may specify. And from time to time, Reserve Bank may give certain guidelines that this has to be realized or this has to be repatriated. So that may be exempted as per the Section 9. Now let us see the definitions. Very interestingly, we said so many things in the features. We have seen the highlights of the Act. Now we are going to definitions. All the definitions of this Act are covered in Section 2. That means under Section 2, subsections are given. In subsections, various terms are explained. From the syllabus point of view and from the examination point of view, for the students, I have given some highlighted or most important definitions. That first one is authorized person. Section 2, subsection C deals with the authorized person. While explaining the features, I told that only authorized persons are given permission to deal with the foreign exchange, right? Then who is that authorized person? According to this section, authorized persons means an authorized dealer or money changer or offshore banking unit or any other person for the time being authorized under Section 10 subsection 1 to deal in foreign exchange or foreign securities. That means authorized person means either he should be an authorized dealer or a money changer or offshore banking unit or any other person specified under the Section 10 subsection 1. What is Section 10 and subsection 1 says? It deals with the authorized person. That is, Section 10 to 12 are dealt in the chapter 3. 10 to 12 are in the chapter 3. In the Section 10, everything is given which is required for details about authorized person. Who is going to appoint the authorized person? That is granting of authorization. For granting the authorization, application has to be made to the central bank. Every country will have its own central bank. Likewise, in India, we have Reserve Bank. The Reserve Bank may, on application made to it in this behalf, authorize any person to be known as authorized person to deal in foreign exchange or foreign securities as an authorized dealer, money changer, or offshore banking unit. For such authorization, application will have to be made to the Reserve Bank. The authorization shall be in writing and shall be subject to the conditions laid down therein. That means those who want to deal with the foreign exchange, they have to make application to the Reserve Bank of India. The Reserve Bank may give that person an authority to deal with the foreign exchange. This is in the section 10. And in section 11, Reserve Bank has some powers to issue directions on this regard. As well as in the section 12, Reserve Bank has a power to inspect the authorized person. Not only appointing the authorized person, it can issue direction to the authorized person to deal with, as well as it has power to inspect the authorized person whenever it needs. So this is about the authorized person. I think a lot of information is given about the authorized person. Next, currency. Generally what we say is currency is nothing but currency notes, right? But according to the Act, it's not like that. Section 2, subsection H deals with the currency. Currency includes all currency notes, postal orders, money orders, checks, drafts, traveler checks, letter of credit, bill of exchange and promissory notes, and credit cards. See, these are the various types of various terms which are included in the term currency. Not only this much, it also includes such other similar instrument as may be notified by the Reserve Bank of India. In addition to this list, Reserve Bank of India may give or may include other similar instruments. While knowing the currency, we need to know about the currency notes also. Actually, generally, the currency notes nothing but the currency notes what we are seeing today for daily transactions. But according to the Act, it means include not only the cash, it includes the cash in the form of coins as well as banknotes. Recently, the Reserve Bank has notified about this. It has notified debit cards, ATM cards, and any other instrument by whatever name and called that can be issued to create a financial liability as currency. See, given the currency notes, postal notes list about the currency. In addition to this, ATM cards, credit cards, or whatever the cards what we are using for today for transaction, that is called as currency according to this section. Next, foreign currency. According to section 2M, simply it is explained, it means any currency other than Indian currency, Indian rupees. Except the Indian currency, all currencies are foreign currencies. Next, the foreign exchange. Section 2, subsection 1, N. It means foreign currency, and it also includes deposits, credits, and balances payable in foreign currency, and drafts, traveler checks, letter of credit, bill of exchange expressed or drawn in Indian currency but payable in any foreign currency. And lastly, drafts, traveler checks, letter of credit, bill of exchange drawn by banks, institutions, or persons outside India but payable in Indian currency. So this is about foreign exchange. Next, foreign security. Section 2, subsection O. It means any security in the form of shares, stocks, bonds, debentures, or any other instruments denominated or expressed in foreign currency. It also includes securities expressed in foreign exchange, where redemption of any form of return such as interest or dividend is payable in Indian currency. This definition of a foreign security is very wide. It covers the cases of companies which maintain two share registers, one in India and other outside India, so that the shares entered in the register maintained by the company abroad shall be regarded as a foreign securities. Okay. Next, contraventions. Contraventions of what? Contraventions about or contraventions of any provisions of this act. Contraventions of any rules, regulations, notification, directions or order issued in exercise of the powers under this act, and or any condition subject to which an authorization is issued by the Reserve Bank. Penalties for contravention. Penalties where the amount is quantifiable. If any person contravenes the provisions of the act or rules or regulations of the act, he will be penalized, and that penalty, if it is quantifiable or the contravention is quantifiable or the dealing is quantifiable, where the amount is quantifiable, the penalty can be up to thrice the sum involved in the contravention. Where the amount is not quantifiable, the penalty may be up to rupees 2 lakh. And even after this, contravention is continuing one, further penalty which may extend to rupees 5,000 may be levied for every day after the first day during which the contravention continues. But the interesting thing is, the penalty shall be levied upon adjudication. That means after hearing and determining judicially by the adjudicating authority. Chance will be given for the parties to justify their contraventions. Friends, this is about Foreign Exchange Management Act. In the future, I am coming with the new acts. Thank you for watching this video. Stay connected by subscribing my YouTube channel. Thank you.